Good morning and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So it's a good time to start thinking about the markets. It's going to be a short week, especially considering that we are entering the Easter holidays and we'll be having a lot of bank holidays on Friday. So on Friday, we'll be expecting all the major stock markets to be closed, as well as commodities. So only forex will be traded, and of course on thin trading volume. So we don't expect much market activity on Friday. So today we'll be going through all the top major events that we're expecting in the markets this week. And once we go through that, we also be looking at technical analysis to try and understand where the markets might be headed next. We'll try and understand the prevailing market patterns or structures. And once we go through these, then hopefully everyone will trade from an informed perspective. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So I'd like to begin with a disclaimer. So these sessions are purely educational, they are not investment advice, and they are not a recommendation to trade. So you should always do your own due diligence, and as usual, practice proper risk management. So let's get things started, especially considering we had some heavy rains yesterday. I hope you guys were not affected. So let's get going. I'll be starting with the economic calendar, trying to focus on the major things that we are expecting for the week. And once we go through these, then we'll look at the key market highlights. So the very first thing you notice on the economic calendar is that today being Monday, we don't have any major news. So early in the morning, we had the monetary policy meeting minutes coming in from Japan, no major changes. CBI realized sales for the UK. This is expected at 2 p.m. And then a speech from FOMC member Bostic will be presented at 3:25 p.m. New home sales data for the US at 5 p.m. and a speech from MPC member Mann. And this will be happening at 5:15 p.m. So clearly, we don't have any major news. As usual, on Mondays, we don't usually have major news. So as I keep telling you, if there's no opportunities, then you just keep doing your analysis. No need to make undue trades. So what we have noticed over the past couple of weeks is that on Monday, there's usually low trading volume, but then there's always that one asset that is making some major moves as a result of maybe the events happening over the weekend. And this tends to dominate the day. So last week on Monday, the major market mover was oil. And this week, still on Monday, I expect oil to be dominating the market movement. And this is as a result of the key events that happened over the weekend. So we'll be going through that shortly. But before that, let's look at the key highlight of the economic calendar. So tomorrow, early in the morning, this will be at 8 a.m. We'll be looking at the Bank of Japan core CPI year over year. So these are big and major measure of inflation in Japan, and especially considering that there was a surprise rate hike of 20 basis points in Japan last week, then a focus on Japanese inflation will be very important. So remember, the Bank of Japan is looking to keep inflation high with the goal of seeing wages rise steadily and get a hold of the Japanese economy. That's a key goal for the Bank of Japan. So we'll be observing the changes in prices at 8 a.m. So later on, we'll be looking at the core durable goods orders in the US, and this is a measure of consumer purchasing power. We'll be looking at durable goods orders too, and this will be released at 3:30 p.m. before we shift focus to the housing prices. So a key major indicator of housing prices in the US is the Case-Shiller Composite 20 Housing Price Index, which will be reported at 4 p.m. tomorrow. And then later on, we'll be looking at the Conference Board Consumer Confidence Survey before focusing on Richmond Manufacturing Index. So it seems likely that there will be increased volatility in the market for the US dollar pairs. And this as a result of the large number of economic reports that will be released from 3:30 p.m. to 4 p.m. and then 5 p.m. Then on Wednesday, the key highlight data will be the consumer price index for Australia. So this will be a key indicator of the trends in inflation in Australia. And this is data that the Central Bank of Australia or the RBA considers to be premium for making policy decisions. So if we happen to see a major change, then this could lead to some good volatility. So later on, we'll be looking at the FOMC member Waller. This is the second member of the Fed who will be speaking in the week. Then retail sales data for Australia. So Australia, we might be having some good volatility from the Australian dollar on Tuesday, as well as on Wednesday, as well as on Thursday. Then later on, the GDP for Canada, as well as the US, before we look at the weekly unemployment claims data. Then later on, pending home sales, as well as the revised University of Michigan Consumer Sentiment Survey data. Then on Thursday evening, remember Australia and New Zealand are way ahead of us, so they will be celebrating Good Friday earlier than everyone else. So in this case, for them, the Good Friday celebrations in our time starts on Thursday. Then for the rest of the world, this is when we will be having the bank holidays in Switzerland, the Eurozone, the UK, as well as the Canada and the US. So during this time, we'll be expecting all major stock markets to be closed on Friday as people celebrate Good Friday heading into the Easter Monday celebrations. However, one key and very important data in the market will not be spared. It will not be able to skip the Good Friday celebrations. So on Friday, there will still be activity in the US as traders focus on the core PCE price index data. So while we know that the stock market will be closed on Friday, we also know that the Forex markets never close. So they might be trading on low volume. But then since this is a major data point, then there's a high likelihood that we'll be getting a major directional move from USD pairs, especially considering the outcome of the core PCE price index data. So that will be a key focus in the market on Friday. And with the Fed recently deciding to hold interest rates level, and then the overhead CPI or consumer price index coming in at 3.2%, a major shift from the previous reading of 3.1%, then there will be a lot of focus on this data to see the direction of the US inflation rates. So as always, we know that the Fed has been looking to push the core PCE down to 2%. But then the index has shown that inflation has remained significantly sticky within the US, and this will be a major indicator. So I'll be switching to a different economic calendar to show you the annual changes in the core CPI. And once we cover that, then hopefully everyone will know how to approach the markets. So this is a tradingeconomics.com calendar, and I'll be shifting all the way down to Friday. So on Friday, this is when we have the core PCE. Just a minute. Yeah, right here. So month over month, the previous increase was 0.4%, and now we're expecting a smaller increase of 0.3%. But I want to focus on the yearly. So in the previous reading, we had 2.4% annual inflation in the core PCE, in the PCE without core, and we expect something similar of 2.4%. But then for the core PCE price index, in the previous reading, it was 2.8%, and we don't expect a major change. We expect that this will remain at 2.8%. So any form of surprise from the previous number will be expected to have a big reaction in the market. So while we saw another key change with Bank of Japan suddenly deciding to hike interest rates, then a lot of investors are seeing major shifts in monetary policy. And the key focus has always been on the US, expecting that potentially the US will consider cutting rates. But then it's kind of difficult to cut interest rates when inflation is on the rise. So in this case, investors will be observing to see if inflation is going according to the Fed's expectations. So a big drop on this number, say inflation drops to 2.7 or even 2.6, then that will increase the bets that the Fed may consider going for early rate cuts in June. But then if inflation spikes higher, let's say we get a number higher than 2.8%, then that would mean that the inflation is currently a bigger problem than was earlier anticipated. And that may mean that inflation remains higher for longer. Sorry, interest rates remain higher for longer, and that should be bullish for the dollar. So for the better part of the year, if you check the FinViz website, you'll notice that among all the major currencies since the year started, the US dollar has been the strongest, and every other major currency has lost value against the dollar. So the biggest loser has been the Japanese yen, which is down 6.79%. The Swiss franc, remember the Swiss National Bank cut interest rates last week, leading to a big depreciation of the CHF. So it's down 6.37%. New Zealand dollar is down 4.93% to the dollar, Australian dollar 4.12%, Canadian dollar 2.58%, the euro 1.97%, and the UK pound 0.95%. So all of them have lost value to the dollar, and this is year-to-date performance. So if you go to a smaller time period, let's say in the last 1 month, then you'd notice that the US dollar has been pretty strong, with the euro making a very slight gain of 0.01%, while all other currencies have lost to the dollar in the last 1 month, with the biggest loser being the New Zealand dollar, down 3.1%. So also, if you look at month to date, this is a beginning of the month up to today, 25th. The Australian dollar and the euro have made some slight gains to the dollar, but the rest of the major currencies have lost to the dollar. And of course, in the last 1 week, you'll notice that all of these currencies have been gaining against the dollar, but the UK pound and the Swiss franc have both lost to the dollar. So that's a summary of how these major currencies have been performing. And happy 11/11, positive energy for everyone. So let's get on with other major news impacting the markets today. So we have the oil markets. This is the key highlight for the day. Oil rises as heightened geopolitical risks exacerbate supply concerns. So oil prices rose in the Asian trading on Monday on concerns over tighter global supply brought about by escalating conflicts in the Middle East between Russia and Ukraine, while a shrinking US rig count added to upward price pressure. So it's a theme that we have been covering together for the better part of, I would say, the last 2 weeks, with both sides, demand and supply, indicating more pressure for oil prices to go higher. So some of the key things we've been observing is the continued strikes on on Russian oil infrastructure. So these strikes have been reducing supply in the market, and as a result, putting upwards pressure on price. So the other key data that we've been focusing on is the US, and crude oil inventories in the US have been reducing. So with crude oil inventories in the US reducing, it puts upwards pressure on price. And of course, we also have the demand side, where we have seen factory activity in China improving. Remember, China is the big importer of oil. So as a result of the increased factory activity, then it raises the outlook for demand, which basically implies pressure to see prices moving higher. So that has been a major trend in the market. And then now from this article, we can see that there is more data on the same. So Brent crude futures, and this is about this morning, climbed 39 cents or 0.5% a barrel, and US crude futures gained 40 cents or 0.5% per barrel. So both benchmarks fell less than 1% last week versus the previous week. A stronger US dollar, which rose about 1% over the last week, has kept a lead on prices. So escalating geopolitical tension, coupled with a rise in attacks on energy facilities in Russia and Ukraine, alongside receding ceasefire hopes in the Middle East, raised concern over global oil supply, said Hiroyuki Kikukawa, president of NS Trading, a unit of Nissan Securities. So meanwhile, the oil rig count fell by 1 to 509 last week, showed data from energy services firm Baker Hughes indicating lower future supply. So Moscow launched 57 missiles and drones in the attack that also targeted the capital Kiev in Ukraine, 2 days after the largest aerial bombardment of Ukraine's energy system is more than 2 years of full-scale war. In more than 2 years of full-scale war, Kiev said. So the move followed Ukraine's recent attacks on Russian oil infrastructure, with at least 7 refineries targeted by drones just this month. So disruptions to oil refineries in Russia have added pressure on fuel markets, leading to rising demand for available crude oil cargoes, analysts at ANZ Research said, adding that about 12% of Russia's total oil processing capacity was impacted. So Indian oil refineries refusing to take Russian crude carried on PJSC comfort tankers due to US sanctions was also adding to the global market tightness. So in the Middle East, Israeli forces besieged 2 more Gaza hospitals on Sunday, pinning down medical teams under heavy gunfire, the Palestinian Red Crescent said. Israel said it had captured 480 militants in continued clashes at Gaza's main Al-Shifa hospital. So the US Secretary of State, Antony Blinken, told Israeli Prime Minister Benjamin Netanyahu on Friday that Israel risked global isolation if it attacks the Palestinian city of Rafah in the Gaza Strip. So elsewhere in the Middle East, US forces engaged 6 Houthi unmanned aerial vehicles over the southern Red Sea after the group launched 4 anti-ship ballistic missiles towards a Chinese-owned oil tanker, US Central Command said on Saturday. So there's also that other factor of the Red Sea being unpassable, where ships now have to go through Africa, around South Africa, for them to get to Europe. And this includes Chinese-owned oil tankers. So that insecurity has added a premium to the price of oil, and this may explain why we are seeing a very strong oil market. So on the earnings front, there's no major companies that are announcing earnings this week. So the key highlight for the week would be GameStop shares. So GameStop will be announcing its earning reports after market close on Tuesday. So that should be at 11 p.m. Then on Wednesday, we don't have any major notable earnings. So then on Thursday, the only company to focus on will be the Walgreens Boots Alliance, which is one of the companies that was recently removed from the Dow Jones Industrial Average in late February. So there will be a strong focus on Walgreens Boots Alliance, as well as GameStop earnings this week. So those are the major highlights for the week. I don't think there's anything more. So for the day, the speech from Bank of England Monetary Policy Committee member Catherine Mann will be a major focus. UK CBI distributive trades on March. Then Fed Board Governor Lisa Cook will be giving a lecture later in the day. Fed Bank of Chicago President Austin Goolsbee will be having an interview on Yahoo Finance later in the day. Then Fed Bank of Atlanta President Raphael Bostic will be participating in a moderated conversation. And of course, lastly, we'll be looking at new home sales in the US, and that is later in the day. So those are the key highlights for the day. And now with that, I think it's time we start looking at the charts, understand the major trends and the expected movements for the day. And as soon as we cover that, then hopefully everyone will be prepared to attack the day, and hopefully everyone will have a peaceful day. So if you have any questions related to the presentation, feel free to type that in the live comment section, and I'll be responding to that towards the end of the session. Good morning, Tapsked. Good morning, Edwin Maina, Manthi, Ann Kinungi, and Apollo. Hello, J Squad and Hilary Kimtai. Thank you guys for joining the session. So now let's go into the charts. Somehow I'm trying to share my chart here and I'm having some challenges. Perfect. Now that I got it, I think we can begin right away. So this is the MetaTrader 5 trading application, the app that we normally use to trade. So remember, with FXPesa, we have multiple platforms. We have MT4, MT5, as well as the equity trader available on all app stores. Now, using this platform, I'm going to try and cover the major currencies, indices, and commodities before we end the session. So first things first, the dollar index was pretty strong last week. You can see how we ended the week in style on Thursday and Friday, with the dollar index making some major moves. But then today, as we start the day, you can see the dollar index is taking a slight pullback. So with the dollar index being pretty strong, there were some major trends that were broken. And I believe the key highlight for the week was the USD JPY currency pair, which managed to complete the journey, something that we have been discussing over the last 2 weeks. So we saw some consolidation here, a breakout higher, consolidation, breakout higher, consolidation, breakout higher, and eventually go to the target of 150.866 before we broke here, moved up higher to 151.798. And once we go to that level, then you can see we are almost completing a pattern called a double top formation. So in a double top formation is where the market is unable to break a resistance level twice. So in this case, if we consider this our resistance level, you'd notice that the double top formation begins from here. It tends to take an M formation, and it often represents a reversal approach or reversal pattern. So in this case, we expect to see the market moving back to the neckline. So the neckline would be the previous low right here. So this has not happened yet. So the double top formation is not complete yet. And this means that we practice some more patience before trading this kind of formation. So in such a case where the formation hasn't happened yet, then we trade what we see or the prevailing news. And in this case, what I am seeing in this market, it's more of a triangular formation. And from a triangular formation, we all know we are looking at some form of consolidation. So if you are to think of this area here as the resistance, and this area here as the support, then we know that for that period, the average price direction is this way. So at some point, we are bound to see some form of breakout, and potentially with a strong dollar, we could be seeing the breakout being on the upper side. So I'll be more conscious of this area today, trying to see if the dollar eventually breaks towards the upper side and presents a momentum back to the previous high. So this seems like a likely scenario for the day, and this is on the 15-minute chart. So for Euro USD, we had a big drop in the euro after earlier gaining in the week. So the dollar ended the week as a winner. But then from the 1 hour chart, if you zoom out, you notice what happened here. So we had this support area here holding on quite strongly. So if I adjust my trend line here, you notice that it was a major bounce for the Euro USD. So after hitting this particular support, you can see how we have opened the week with the euro being pretty strong. So we are seeing some form of pullback, and the immediate target, especially considering we're expecting low volatility today, could be 1.08362. So we could be seeing the market retesting this area here, which was a major support, now turned into a resistance. So these two areas are pretty important in identifying the potential movement of Euro USD, especially considering we are bouncing from this lower trend line and the market is moving higher. So as for Pound USD, we are seeing something similar, the market making a strong bounce from the lower side. And of course, the previous area where we had support was on this pullback here. So potentially, if we continue seeing this bullish momentum, then this also represents the highest price that we saw on Friday, So the market could potentially rally to that point. So USD CAD seems like one of the most interesting ones after the dollar made a very strong rally and got to our target, the resistance level at 1.36058. Now we are seeing the Canadian dollar strengthening against the US dollar, and this strengthening is also backed by the strength in oil prices. So in this case, USD CAD at a major resistance level, oil prices strengthening and the Canadian dollar strengthening, and now we can see footprints of sellers trying to enter this market, especially during the Sydney and Tokyo sessions. There was this attempt, a pullback, and now we are seeing some form of confirmation. So it's likely that this pair will continue moving downwards, but I don't expect a full complete swing all the way down. So I don't expect this to be happening today, but potentially we could be seeing some much smaller movement, perhaps towards the Friday's low, and this was the low on Friday last week. So we could be seeing this playing out today, or even extending this to tomorrow. Then as for gold, it's more of a consolidation after we had this strong rally happening here. So the market made a rally here last week, then consolidated for a while before breaking out towards the lower side, pulled back up and down, and now what we have is more of a consolidation price formation. So in this case, using the 15-minute chart, you can easily identify the consolidation. I don't expect gold to be making any major moves unless there is a breaking news happening somewhere, maybe in the geopolitical scene. So for now, even with Russia declaring that it's in a state of war, I still expect gold to be trading within these two trend lines. So we'll be expecting to see a breakout later in the week, but for now, it's just these swings, and the current swing seems to be moving from the upper trend line. We could be headed much lower towards the lower trend line. So this is the prevailing swing in gold as we speak right now. So for the US equities, they made new all-time highs last week before pulling back downwards. So for the Nasdaq, there was no major break. You can see, yes, it's a new all-time high, but the previous high was also so close. And now we are seeing the market pulling back downwards, which means that now we are seeing more of a ranging price action. So if you think critically of this area here, that is the last 4 weeks, we can generally say that even if there is a slight momentum upwards, the price action is relatively just sideways momentum. So with this in mind, that the price action is just moving sideways, then it makes more sense to now anticipate price pulling back downwards for the week. So from the 1 hour chart, this is how it looks like. So we could be seeing some further pulling back downwards later in the day. So for the US30, it seems to be the one that made the biggest break last week. So there was a major resistance here, the break happened here, and we found a new top, a new all-time high. But then towards the end of the week on Friday, there was a big drop, and there seems to be some more room to retest this area here. So I don't think the market will continue with this bullish momentum. So there is a good chance we find this area as the bouncing point. So I'll be more concerned about price action if the market was to retest the 39,233 price level. So for the US 500 or the S&P 500, we had a major breakout last week and we formed a new all-time high. But then since then, we can already see that this is a pure consolidation zone and the market is just playing between the two trend lines. So if you do a 15-minute chart, then this is clean. And on the lower side, this is also clean, indicating the major support and resistance levels. So right now, we cannot even overthink it. This is just a market that is trading within these two trend lines on the 15-minute chart. And on the short run, as we go for the London Open, then we're expecting the market to at least get to this area and then back downwards. So from the 1 hour chart, this is how it looks like. So the market is just trading within a flag. If we consider this price action movement as our flagpole for last week. So this big momentum upwards, then the market consolidates, and then we'll be expecting a breakout later in the week. But for now, today being Monday and seeing low volatility in the markets, there's a good chance the market will stay within these two trend lines. So for the UK oil, this is some nice pullback we are seeing right now. But then if you think about it, the big momentum happened about 2 weeks ago. So it ended last week. So we got this strong bullish momentum. So that the market got to that high, then what we are seeing here is the market now forming lower highs, kept forming lower highs up until it made a breakout. So if I zoom out here, and now we look at the lows we were getting here, they're also following this path. So I would say the market was forming some form of flag. So the way you identify some of the weaknesses is if the market is unable to form higher highs or higher lows. So in this case, if you look at the price action here on Friday, oil prices did not make a lower low. So in this case, we did not touch the lower trend line here. And then the market pumped higher. So the price action moved higher, forming a high that was higher than the previous two, pulled back downwards and eventually broke the trend line. So now what we are seeing here is a market that is now seemingly creating some form of bullish pattern or bullish momentum. And if you draw a trend line here, then you notice that there's something cooking around this area. So now the emerging price pattern is indicating some form of consolidation here. And this is on the 15-minute chart. So overall, the flag was moving downwards. Now it has shifted to a little bit bullish. And now as the price moves downwards, we observe the price action around this area here to see if there's a chance that the market bounces from here, and potentially we could be trading all the way up towards the previous high. So this is a real possibility for the day. So I would be very observant on that area to see if that kind of pattern plays out here. So European equity indices also made a new all-time high last week before pulling back downwards. But now from what we are seeing here, it's more of a market that is consolidating. So if you are to do a trend line here, then you would connect Thursday, Friday, and Monday, and that would be the key resistance level. Then for support, I would say along this line here, but then it seems likely that the Euro 50 cash index might be headed for a break here. So if there's a break, then it would present an opportunity to go for a bullish position. So French 40 index are still moving sideways, so I wouldn't be expecting any major thing to be happening here unless the market eventually made a clean break. So USD against the Swiss franc, this is where we had a surprise rate cut. So we had a very strong rally, dollar gaining against the CHF. And now from what we are seeing here, it's a market finding a very strong support here. And of course, we can see that there has been some form of strong resistance here with the exemption of this spike on Friday. So now potentially a continuation. So we only trade when there's a break here. So lastly, pound yen making a very strong rally and then a pullback. So the yen has been strong towards the end of last week, but then today the price action seems muted, meaning that there's no much of an activity happening here. So we remain patient until there's a break. So as for Bitcoin, we are seeing a big pullback that happened here with the price making a top about $73,000 all the way down to around $60,000 before now making a recovery last week. So we have seen the first attempt at recovery here, market pulled back downward, and then made another recovery last week. And now the current price action is indicating $66,900 per Bitcoin. So there is a good chance that this might continue, but also you have to consider that with this price action, a breakout would present the best bullish position. So notice in the most recent highs, they have been slightly moving downwards, but then also the most recent lows, they have been moving upwards, which indicates some form of consolidation, which also presents the idea of trading a breakout. So we should be most probably looking for an area here where the market potentially makes a breakout and then a rally for a new all-time high. So in this case, a breakout above this, then a potential market momentum heading higher. So this is one of the key considerations for the price of Bitcoin going forward. So that's it for the day. Thank you, everyone. So I'll be checking on the questions before I end the session. So apologies, Apollo, I haven't covered this yet, but I'll be considering it. Describe the USD JPY movement. I feel like the dollar is not making higher highs no more. So the thing is, there has been a lot of fear for USD JPY traders, and the fears are quite justified. So if you are a USD JPY trader, there's still more room for upside. But if I take you through memory, then I'll show you that this was the highest price in the year 2022. And once the price got to above 150 Japanese yen per dollar, the Ministry of Finance intervened in the currency market to support the yen, and we had a big swing downwards. So about 50% of the gains we had made over the year were reversed within the last couple of months towards the end of the year. Then last year, we had a very strong rally. The market gets to 150 again, and then the Bank of Japan intervenes again, and the market drops towards the end of the year. So in the last 2 months of last year, we had a big drop with the yen gaining against the US dollar. Then the year starts again with a very strong dollar in the market, and another attempt to break that level comes. So if you observe this clearly, try and remove all this noise. So if you observe this clearly, you notice that now the market is attempting to break the same area again. And if we happen to breach this area, then the Bank of Japan may intervene to support its currency. So that creates fear, but then at the same time, speculators have been facing the Bank of Japan for quite a while now. So yes, it seems like the market is largely bullish, but with a lot of caution, just in case the Bank of Japan decides to intervene in the currency market. So that's why the market is seemingly being cautious at these levels. So there's a good chance that if the market makes a breakout here, especially today, then the market could rally and retest the previous high. And this is quite a possibility. So in this case, I would be more conscious of a potential move here, but also trade this with tight stops. So from the forward chart, seems bullish to me. Daily chart is bullish, weekly is bullish, even monthly is bullish. So in this case, when you have an overlap of all these time frames indicating bullish momentum, it tends to be more likely that the market will move in that direction. So good question from Apollo. Early in the year, FXpesa economic outlook for 2024, among them RAID projected gold hitting $2,500 per ounce, arising from demand by central banks and global tensions. Has this faded, or are they still alive? So gold tends to be the one asset that people go for when there is uncertainty in the markets. And now I think there's some major changes happening. So one of the key changes happening is that inflation is proving to be quite tricky for the US to handle. So with inflation being quite sticky, it's creating an environment where the dollar is strong, yields on US bonds are also strong, and as a result, it's creating this alternative reserve asset, which is the US Treasuries. And as a result, we are seeing the demand for gold reducing significantly. But then central banks are still buying, and this is keeping gold at bay. So while central banks are still buying gold, and we have seen this appreciation happening week over week. On the daily chart, you can see it's an overall bullish trajectory. And having seen a new all-time high last week, I wouldn't discount on gold maybe facing any major challenges in terms of the bullish momentum. However, on the short run, it seems more likely that the price will be moving back downwards. So while we could continue seeing more upwards pressure on gold, for now it seems like we are seeing this volatility and the price moving back downwards. But then with Russia declaring war and support for the Palestinians, there is a good chance that these escalations could lead investors to buying even more gold, and as a result, a potential bullish momentum this week. So on the short run, it seems more likely to go for short selling positions in gold. But then on the long run, once the price pulls back, it's even a much better idea to look for bullish positions at much lower prices. What are some of the factors that can make a stock be listed from NASDAQ or Dow Jones? For a stock to be delisted from the NASDAQ or Dow Jones, it depends on its price and market cap. So if the index is weighted based on price, then if price goes below a certain level, especially in the case of a share split, then a stock can be delisted, as in the case of the Walgreens Boots Alliance. So also, if a stock becomes a penny stock, then in that case, it may be removed from an index. What is the appropriate risk-reward ratio on a on a 100 USD account? So risk-reward ratio doesn't depend on the size of account you have. It's about the opportunity present in the market and how much you value that opportunity. So it's more like I would like to take this position because it has the potential to give me this amount if I risk this amount. So personally, I recommend 3-to-1, where you identify an opportunity where there is a potential that you will make 3 times the dollar amount you invest in that trade. Comment on the message scrolling on the presentation, fund a new account and get $150 and 30% Karibu bonus. Does this apply to new sign-ins or even existing guys? This is for new accounts, not for existing guys. Don't try to cheat it, we'll know. US 500 roll is the S&P 500 cash index. So it's only the difference in the naming, but in this case, you're trading a CFD product, which represents the performance of the top 500 companies in the US combined as one weighted average. So you can check a good visual from finviz.com. Where is the information on central banks buying gold available? Is this publicly available information in real time for us traders? No, major central banks don't always announce timely reports. So you'd have to research each central bank and see their activity. So once a central bank buys gold, it will probably delay the announcement, but eventually it will. So it's there's no, I haven't seen personally one collective database indicating all the gold purchases by central banks. So thank you very much, guys. Thank you for your time. Remember, there's a new episode of the Bullish Banter podcast. Make sure to check it out on all the podcast platforms, including YouTube. If you'd like to open a new account, check the links below, and you can either register for a demo or a live trading account. And of course, if you're a beginner and you'd like to learn about trading, go to FXPesa YouTube and search for the Novice to Pro series. These will basically help you transition from a complete beginner to an intermediate trader before you become a pro level trader. So thank you very much, everyone. Remember to like the video and share the link on your social media as well as on other groups. And I appreciate everyone in the house. Enjoy a peaceful Easter week.